Hey everyone, welcome back to our series. This is our second episode that we recently branded as Andrew's Insights, where Travis and I, as Hawaii financial advisors, talk about various topics. Travis, I think today we have a very timely topic, something that has been coming up for a lot of our clients and prospects, is what is a fee-only advisor and how are you compensated? And I think it's a great question.
Yeah, it is. And I'm happy that we're doing these because, we get these questions from clients and from interested potential clients all the time. So by putting up this platform, we can get all of our responses and everyone can watch them whenever they want. So happy that we're doing it.
Yeah, and they can hear our voice and our story a little bit. So I think it's important because, like with any service or any product you buy, you want to know the price. You want to know how much you're paying. So I guess, Travis, maybe not specifically about us, but how do most advisors get paid, or what are the different types?
Yeah, so we'll just jump right into it. This is a topic that can be confusing, and we see it. We talk to people that interview various advisors, and they ask the question, "Well, how do you get paid?" And they get a variety of different answers. Right. I mean, I'm sure you've seen in your experience, Scott, the different ways that other advisors charge and get paid. So today we're going to get into some of the different fee structures, and it's not going to be all encompassing. We're just going to touch on the most common ways that advisors charge. So I think I'll start off by talking about commission-based sales. Is that a good place to start, you think?
I think that's what most people are familiar with or have been familiar with.
Yeah. So, this is a common advisor fee structure going back decades where you're working with a broker or you're working with an insurance agent and you're paying a commission through the insurance product or the mutual fund, and the insurance company or the advisor's firm turns around and pays the advisor. And so they're being compensated through commission. This is more typical for annuities, life insurance products, and mutual fund Class A shares. So anyone who bought one of those products, over the last 40 or 50 years, they would have run into commission-based sales. That's one type. And we'll get into the sort of the pros and maybe some of the downsides for each of these as we go on. The second fee structure is one that people probably are familiar with, assets under management. And this is common now, working with an advisor on an ongoing basis where you're paying the advisor based on a percentage of the assets that they're managing for you. And there are some upsides and some drawbacks to that. And each of these will have a different type of person that it fits best with. Anything I'm missing on AUM or commission, Scott?
No, I think that's spot on. I think a lot of clients have been more familiar recently with the AUM model than the commission model. Have you seen that as well, Travis?
Yeah. I think because it's more prevalent that advisors structure their fees through assets under management now, we do see people that already have familiarity with it. Then the third type would be sort of a flat fee arrangement where you're paying the advisor a specified dollar amount for usually a certain amount of work that gets discussed beforehand, or maybe over a certain amount of time, for a year or for 6 months. So that's another type. And then the fourth one that we can touch on would be hourly. So this is if you have a project that needs to be addressed, or just a certain part of your financial plan that you want a professional to look at, you might want to pay an advisor an hourly rate for them to do the work for you. But after that point, the engagement would stop.
Yeah, and I think that the way that an advisor gets compensated is really important. And I think there's a good question is, does the way that an advisor gets paid, does that affect how they may or may not give advice?
Yeah, this is a good question, right? Based off of, the compensation structure, does that change anything about the advice that they give? And I think, one thing that I look at is, well, what's the engagement look like, and how long are you going to be working with the advisor? Right. So if it's a commission-based transaction, for example, in my experience, you don't see a lot of ongoing advice happening once the product has been sold. Just goes back to the incentive for the advisor or the agent. Once they've gotten their commission, there's less of an incentive to provide ongoing advice compared to an AUM model, where if you're paying your advisor every quarter a percentage of the assets that they're managing for you, there's going to be an incentive for them to continue delivering on the value for that fee. Has that been your experience, Scott?
I think so. And I think the way that I frame it as far as compensation and a relationship goes is it a transactional relationship or a relationship based relationship, right? So what is the advisor being rewarded to do? Are they being rewarded to sell something or push a certain product, or are they compensated to maintain the relationship? And like you said, Travis, to be able to make sure that the client is taken care of throughout the life of the relationship, right? So I think there's some stories before where a client, they may purchase an annuity or a life insurance product. And then once that annuity is out of its surrender period or the life insurance policy runs out, that's when they get a call from the advisor. So I think knowing why your advisor is calling is, of course, a good reason, right? Are they just calling you once every couple of years, or is it something where there's a constant stream of communication?
Yeah, that's a really good point. And that kind of brings us to another point, right? Which is people now are more educated on how financial advisors get paid. There's all this information available on the internet to look up what the different terms mean. And that's been, in my view, one of the limiting parts of financial advice is all the jargon that gets thrown around. And people just don't know what some of these terms mean because people don't use these terms in everyday conversation. So one of the terms that comes up a lot now is the term fee only. And you and I are very familiar with what fee only means, but maybe just take a moment to explain to everyone, what does being fee only as an advisor really mean?
Yeah. So to keep it simple, a fee only means that what you see on your agreement is the fee that you're paying, right? So there's no other commissions or hidden charges that's coming up. Whatever the advisor states on their agreement is what you're paying. The fee only. But to your point, Travis, that's kind of a weird term because fee only could mean various things for us, right? And that falls under what we do, which is assets under management for clients, but it could also fall under hourly or flat fee. So fee only, while it is only one, is a type of compensation, it actually means three different types.
Yeah. So, not to confuse everyone more, but that's, there's additional meanings or different ways that fee only advisors get compensated, right? And so you're saying that it's not just the type of fees that they're charging, but I think really it boils down to removing the different conflicts of interest that could be present in other types of advisor fee structures. Is that about right?
I think so. And I think the question is not so much is an advisor fee only, right? It's more about how is their compensation, how are they getting compensated, and then what is their incentive at the end of the day? Is it to, like I said earlier, to have a transactional relationship or to have transactions generate as much revenue as possible? Or is the advisor incentivized to maintain relationships and grow the relationship?
Yeah, and we should mention that, meeting a fee only advisor doesn't automatically mean that they're the right advisor for you. There's fee only advisors that don't have maybe the services that you're looking for, or they don't have the specialty that you're looking for. So meeting the fee only criteria, if that's what you're looking for, is only one part of the puzzle. They also have to meet all the other services that you're looking for and deliver the value that you're paying, no matter what the fee structure is. And so I think maybe that's a good transition for us to talk about, okay, we talked about the different types of fee structures. Now, who would be a best fit for each of the different fee structures? And we brought up four, right? The commission-based sales, we brought up AUM, flat fee engagements, and hourly planning. So starting with commission-based sales, walk us through who may be best suited for that sort of arrangement.
Yeah, I think what I see now as far as the industry goes is commission sales tend to be life insurance, right? That's an easy one. A lot of people need to seek an advisor for help as far as how much life insurance to get, what type of life insurance to get. So I think that's where advisors provide a lot of value in a transactional space. Another area that we see more of the commission-based incentives is for smaller accounts where they may not meet the minimums for assets under management, especially for 529s that are just getting started, right? So an advisor might charge a commission for depositing $1,000 into a 529 instead of charging assets under management. So generally, where I see it is insurance, smaller accounts, and also annuities is also where commissions are often charged.
Okay, then assets under management. Now, are we biased? Maybe, but we're talking about a fee structure where advisors charge a percentage of assets for whatever they're managing in exchange for the services that they're offering. In my view, this is a good fit for people that have more complicated situations or they're entering a transition, let's say from working to retirement. And now it's not just a matter of saving as much money as you can, but you have to coordinate all the different areas of your financial life together. And doing that requires ongoing work in a lot of cases. It's not just a set and forget type of plan. So I've seen AUM advisors work well with those types of clients that need or they want an ongoing advisory relationship.
Yeah, and I think one of the other parts about the assets under management structure that I enjoy is that clients can contact us and call us as much as they want, right? I mean, hopefully not daily, but if they did contact us daily, especially if something monumental or important was happening in their life, they don't have to worry about having to get billed more for the services, right? So sometimes, especially with attorneys, right, they have their hourly they have to charge you based on the hour that they spend with you, but under assets under management, it's all covered. So not only for the amount of time you're with the client, but also time outside of the client, outside of meeting with the client.
Yeah, exactly. And I think as a person's net worth goes up and the size of their accounts go up, the complexity can go up as well. If you go past a certain amount of net worth, you're looking at maybe some estate planning considerations, certainly some tax planning considerations that would make it helpful to have an ongoing advisory relationship, someone that's looking at all the different areas of your financial life every year and making sure that that's all being addressed. Okay, a flat fee. What can we say about flat fee engagements?
Yeah, flat fee and hourly, I think, Travis, I'm going to lump that in together just because we've been hearing a lot more people asking about that. It's been a growing industry, growing trend in our industry, but I don't know how much of a foothold it has yet. But I guess, Travis, I'm going to throw it back to you. I guess, what clients do you see it as a good fit for?
Yeah, flat fee and hourly, that to me fits well with someone who maybe is a high earner, but may not have a ton of assets just yet.
Like a Henry, the high
they
earner
call
is
them
not
Henrys.
rich yet.
Yes. So they're still accumulating assets, but they have significant income. And so they need a professional to walk through certain tax strategies with them or knowing where to allocate some of their savings. I think a flat fee works well for those people. For hourly planning, I see this working well for DIY investors, people that feel confident and have an interest in managing their own finances. And if they do, and they just want a professional as a second pair of eyes to look over their work, then I think hourly planning makes a lot of sense. But it has to be the right type of person, right? The right profile to take advantage of hourly planning, but not want the ongoing advice. And you can always go back to the advisor that offers hourly planning and ask them to do another engagement with you. So that's a good option.
Yeah, and I think there's always going to be a focus on fees and how we as advisors are compensated. But I think, and of course, we're happy to answer that question as we are today. But I guess, Travis, what questions should people be asking their advisor beyond asking, are they fee only or how are you compensated? I think you mentioned it a bit earlier about services, but I guess what services should people be expecting or asking about when they're interviewing advisors?
Yeah, the needs of retirees now, I think, have evolved, and it's beyond investments and beyond budgeting and income planning that advisors can provide. So a lot of the retiree clients that we work with see that as expected, that we provide the investment advice and the cash flow advice. The needs now for retirees extend into tax planning, and they extend into estate planning, making sure that your trust and your will are matching what is in the financial accounts, and your beneficiaries are aligned with your estate plans and your wishes. So as far as services go, there's a long list of things that advisors could be doing for their clients. But if you're someone looking for an advisor, you need to make sure that whatever the advisor offers is aligned with your needs. So that's where the interview process comes in, asking them, what exactly are you going to be helping me with? And just making sure that the services they offer checks all the boxes of what you're looking for.
Yeah, and I think it's now in 2026 as we're filming this, our advisors helping you as a client beyond just the investments, right? The investment piece is important, and at least for our firm, I know that we do that very well. But beyond just investments, like you mentioned, Travis, taxes, estate planning, insurance, all of those items, how is the advisor that you're interviewing addressing those needs, right? Because it all is interconnected. It all impacts each other. So I think that's where we want to be more holistic. We want to provide more value by incorporating these things.
Yeah. And, I find that it's really helpful just to ask questions about how this is actually going to practically work when you're working with an advisor. How many times a year are we actually going to get together? And, if you would rather meet with your advisor online versus in person, can they accommodate that? What sort of topics are you going to be covering at what month throughout the year? And, so things like that, will they be doing the execution of trades for you? Can they add on things like preparing your tax return or putting you in touch with a tax preparer? What's the cooperation that you'll get from your advisor in working with your CPA and your estate attorney? So just as important as understanding the fees and the services, I think, is in practice, how are they actually going to help you and carry out all this good advice?
Yeah, so I guess, Travis, what you're saying is fee only is an important concept and compensation is an important concept, but it really shouldn't be the only factor when it comes to choosing an advisor.
Yeah, and there's all these things we talked about today that go into it. There's a list of questions that is recommended to bring with you when you're interviewing your prospective advisor, so you get a better idea of things like fees, services, and how they deliver advice. We have a copy of that on our website as well for anyone interested in seeing that list of questions. We'll have a link to our website in the description of this video. But use that as, just a basic list, and I think you'll find out a lot of the information that you're looking for to see if they're going to be a good fit for what you need.
Yeah, I think that's a great resource that we provide. I think it's great when we hear that people are interviewing multiple advisors. It depends on the fit, right? And what you're looking for and what services you require. So I guess we're going to wrap this video up. Travis, any parting words, any last thoughts on this topic?
Not on this topic, but as we've started this series of Advisor and Andrew's Insights, stay tuned and send in your questions to us if you have any questions that you want us to weigh in on, and chances are it'll be covered in our next video. So thank you for watching, and thank you, Scott.
Thanks, Travis. Take care.